Him's House, episode 17. I'm Jonathan Stern. I'm here with Lewis Stevens and Dr. H. It is January 3rd, 2025, so we're in the new year. Happy New Year to all of our Hims homies. I should say at the beginning, if you haven't joined the Discord, please join the Discord. That's where the best conversation happens. Also, please like this video, subscribe to our YouTube channel, check us out on Twitter, and subscribe to the Substack. Okay, let's get into it. It is 2025. The goal for today's episode will be to review 2024. This is our year in review episode. I'll turn it over to Lewis first. What about 2024 was most salient to you?
Sure, Johnny. Happy New Year, everybody. Thanks for joining us. As Johnny noted, do remember to check out the Discord. To answer your question, Johnny, I think it's worth contextualizing the entire history of Hims because 2024 was, in my estimation, the watershed year for the company. It was like the Rubicon past which there's no return for all of the bear theses that have been espoused over the last, since the company was founded. Of course, we're being offered substantial returns by the equity currently. So that implies that there is risk because risk equals return. So please don't take, my commentary so concretely and literally, but in my estimation, having studied the company for over 4 years now, it was the watershed year. 2024 was the watershed year, and I will provide some statistics to buttress that thinking. But before I do that, I just want to take a walk down memory lane for a moment and describe, what the company experienced prior to this great year that we're about to discuss for the next hour or so. And so the company was founded in November of 2017 by Andrew Dudum, Jack Abram, and a female founder. And from that point,
Abraham.
Right.
That's all
right. I
right.
think your mistakes on the podcast is actually valuable. It's just a certain, anyway. So they founded the company. And from that point until late 2020, it was a private company and it was growing steadily, but it was not free cash flow generative. And, there was a lot of questions about the unit economics because Hims has been seen as a direct to consumer brand predominantly, with which I've taken issue. And we as Hims House have articulated our issues as it relates to seeing Hims as a pure direct to consumer brand like Allbirds, for instance. And so as of late 2020, as the company was set to go public via a merger with the Oak Tree Capital SPAC, a lot of people questioned whether this was a viable business model. And, duly so. I don't take any issues with the bears, especially at that point. I didn't take an issue with the bears' perspective because they're not generating free cash flow. And every time they get asked about churn on their earnings calls, the answers weren't, objectively, the answers, in my estimation, were not the best. But we stuck with it and continued to listen to each earnings call, continued to pay attention to what they were doing. And throughout 2021, they were still free cash flow negative, but growing rapidly at over 50%. 2022, it was the same case, and the stock, as a result, fell quite dramatically. And we've discussed on past podcasts why that happened. The decline from $25 a share in early 2021 to $3.50 a share in 2022, May of 2022, wasn't, as a discerning equity analyst, I don't take so much issue with that because interest rates were rising. And so your next best alternative, what you can get risk-free, was becoming more attractive. And that was sucking dollars out of the equity markets. And they weren't generating free cash flow. So it's like I get a risk-free rate of 5%, or I, gamble on a free cash flow negative business. And so, the natural dynamics of markets will push free cash flow negative businesses down quite a bit, especially when interest rates are rising. If, the 10-year went to 10%, it would be logical. I wouldn't take any issue with it. So I'm just contextualizing. So 2022 was an interesting year, but at the end of 2022, we saw our first glimmer of free cash flow. And throughout all of 2023, the company generated free cash flow while also sustaining hyper growth, growing subscribers at 40 to 60%, growing revenue at 40 to 60%, and simultaneously producing free cash flow. And so 2023 was kind of the predecessor year to the watershed year that I believe was 2024. And so in 2024, the free cash flow generation sustained. And not only that, its free cash flow margins expanded substantially alongside hyper growth. And in 2024, growth actually accelerated. Q1 to Q3 2024, it went 46% Q1, 52% Q2, and 77% in Q3. And meanwhile, its free cash flow margin continued to expand and their product categories continued to mature. And so I'll stop here and we can continue to bounce ideas off each other. But I think that is the objective, indisputable reality for the business. It has matured, it has evolved, it has sustained hypergrowth, it has now generated free cash flow in 7 out of its last 8 quarters, 7 of its last 7 quarters, and 8 out of its last 9. And it's been uninterrupted free cash flow generation for the last 7 quarters. And that's where we're at. We're at the strongest position the business has ever found itself in. Customer acquisition cost remains healthy. And 2024 was an exemplification of the fact that the business is maturing and doing very well.
And I want to throw something in related to your favorite statistic, Lewis. Sales and marketing as a percent of revenue. It is at its lowest point, I think 45% in years, maybe the lowest point since the company went public. So they are acquiring customers somewhere around $900 is the CAC. We've gone into the difficulty in measuring that given some opacity related to churn, but the very important statistic, sales and marketing as a percent of revenue, is at its low point in 3 or 4 years, which is very exciting. Okay, Dr. H. Lewis called it a watershed year, said something about the Rubicon. What do you think about all of that? How do you see 2024 in the rearview mirror?
I think HIMSS is here. It's arrived. I mean, obviously, HIMSS has been around for a few more years than just 2024, but I really feel like 2024 was the year when all the marketing and brand recognition really took off. I'm looking at my Facebook and there's ads. I go on YouTube to watch a highlight of a football game and there's an ad. I'm watching live football and there's a live TV spot there. I'm driving on my commute to take the kids to, daycare or an event or whatever, and they're talking about weight loss for hers on the radio. So I think it's just everywhere now, and that's awesome because it just shows that they're in a position where they have a strong foundation. Now let's get everyone thinking about hims and hers, and you can't escape it. It's wherever you're consuming media or anything like that, there's a presence for hims and hers, and I think that's awesome. To me, it shows that it's here and it's strong, and it's just going to keep going down that runway.
Dr. H, could you take us through the new products launched this year and what stood out to you there?
Yeah, I just went through some of the product launches through their Twitter feed, beginning of 2024. Some smaller products, with their pre-existing lines with, hair loss and AD. They started doing some more custom combination compounds with different chews and combining AD with early climax treatments and things like that. But what mostly everyone's interested in is the weight loss stuff. They've had the oral treatments for a while before they officially launched and announced the GLP-1 treatment for semaglutide. That was around May. And they made that public, and it shortly became available to most of the people in the United States around May and shortly after that. So that's what everyone's going to pay attention to. And I thought that was an interesting way that they would launch the weight loss with orals first and then semaglutide and kind of avoiding tirzepatide. And with, our knowledge of what happened in subsequent months with all the FDA, trials with trying to get the shortage list updated and if it's available or not, we kind of saw how that played out. So it was interesting to see how HIMSS decided to stay out of it for now, even though the stock gets pummeled on every little bit of update. So weight loss, adding on to, pre-existing treatments. And, you see in their personnel hiring, they're kind of laying the roadmap of where they want to go. and where they want to take treatment and where they want to take the company. They hire for the weight loss part. They hired Carrie Schultz back in July. He's the former board of, sorry, he has all that experience with Zenovo. And, so big player in the GLP-1 business. They hired, let's see, was
Chris Payne from Tinder and DoorDash.
Deb Outner, I believe, was a former FDA commissioner. So someone who actually has experience with working in the FDA. So you look at their hirings and it just kind of paints a picture of where they're kind of wanting to go with everything. They hired Dr. Shepard, who was an OB-GYN specialist, as the chief medical officer of hers. So you're seeing sprinkles of this roadmap that has already been presented in the investor presentations, but then you see them actually going forward with this plan by bringing in people with great experience in these areas and fields that they want to take the company in.
What surprised each of you most about 2024?
Well, Dr. H, do you have a really compelling answer? Because I have
I kind of mentioned a little bit when I was talking about the roadmap of GLPs and new medicines, and what kind of surprised me a little bit was how they did not launch with both semaglutide and tirzepatide right away. And maybe that's why I'm just a lowly doctor, doing my little trade here and not a CEO of a multi-billion-dollar company. So they obviously have a game plan for that. But, in my mind, you could have had maybe 6 months of revenue from tirzepatide. A lot of other telemedicine companies really jumped in and probably made quite a bit of money from tirzepatide. And now, with hindsight now, 2020, they're trying to scramble and figure out what to do now that it's off a shortage. But you could have had maybe 6 months of, tirzepatide sales. Who knows? Maybe you could have captured those people wanting tirzepatide. And now that this FDA decision's kind of up in the air or off the shortage list, they could have maybe converted them to semaglutide or the orals pretty easily. So that was a little surprising to me. I could see how they would want to be a little bit cautious, but if I were a really aggressive business person, I would have just said, hey, let's just jump in, offer both, and you get, take the money to the bank while the bank's open,
On that topic, Dr. H, Ro did offer tirzepatide. Is that correct? Did they offer semaglutide?
Yes, they had both.
So they did have both, while Hims only had one. Okay.
Mm-hmm.
Interesting.
And Dr. H, what is your perspective on why Ro would go that route versus Hims going the, I guess, more conservative route? I guess I could be thought of that way.
I'm not sure. That's why it was a little surprising to me. If it were me and my very minuscule business experience, I would have said, hey, just make that money while you can and deal with it later. Maybe they had some discussions with their board of advisors and, they had maybe planned out things 2 or 3 steps ahead into the future with all scenarios and decided that, they want to take the more conservative route. So I don't know exactly why they didn't go with tirzepatide right away when many other companies did. So we'll see which way ends up being the safer or more effective route, I guess, over the next, 5, 6, 7, 8 months and see what happens.
Johnny, I do have a surprising comment. Most surprising to me is that notwithstanding CAC per net new sub remaining stable, notwithstanding sales and marketing hitting its lowest point ever in consecutive quarters, it continues to decline. Notwithstanding 7 of the last 7 quarters having generated free cash flow, notwithstanding 8 out of the last 9 generating free cash flow, notwithstanding the most successful product launch in the company's history in the form of oral, not GLP-1 weight loss drugs, notwithstanding growing subs at 40% in Q3 2024, or ex GLP-1s, total 44% with GLP-1s, the market has remained, highly, highly skeptical of the thesis. And it's like, and so the question, as I'm reviewing everything today is like, at what point does the skepticism abate to some degree? And some would say today it already has, but if you look at the valuation through the lens of what we talked about in the Discord, the 4 points of equity value, how much free cash flow a company generates, how fast it grows, how durable it is, and what your next best alternative is. If you look at the company through that lens, it should probably be valued a lot higher based on the information and data that we have today. So what's most surprising to me is that the skepticism hit its all-time high in the company's best year after 7 years of maturation and growth. That's continues to surprise me every day.
I don't want to throw too much cold water over that. I think there are two sides that I want to present. One is which the stock rallied 170% in the past year. So it's not like the market took HIMSS to record lows in the face of record performance. It was the opposite. I mean, the stock did have a wonderful year, extremely choppy, extremely volatile, but I think started under $9 and finished around $25 a share. So about 170% gain. But you're right, Lewis.
That's totally fair.
But you're exactly right that like in the preceding years, it was taken down from $25 all the way to $6 and $7 a share. Maybe lower, right? I think it was under $5.
Yeah, like 3
and
2 or 3.
And I will say that sentiment is so mixed online. Someone on Twitter just started covering Daniel Pronk, sort of a new name for me, but just started 250,000 YouTube subscribers. Maybe one day we'll be there. In any case, he started covering stock and was noting on Twitter that the comments to the YouTube video were just extremely mixed. You have people that are just so bearish on HIMSS. There's no moat. What is the company going to do with Amazon? And then there are some believers. And so I do think that as we enter 2025, that situation where we just have this battleground stock and some people believe one thing and others believe exactly the opposite is very much in focus and part of the story. But Lewis, just to final thing, wouldn't you say Wall Street is warming to the HIMSS and hers story?
Yeah, well, I mean, yeah. Well, I have two ideas to share. On the subject of the stocks trading and where it is today, we've used the example on past podcasts of Walmart in 1973 or 1972 to 1975, during which the stock fell 75-80% when inflation spiked and interest rates rose and there was a liquidity crisis. And that is precisely the conditions under which HIMSS experienced its massive decline in 2022. As an aside, there was some nuance during the Discord. Talk to me about it. There's some variables that there's nuance, but the way that I look at Walmart's decline during that time is if the market were truly efficient, the stock would have never declined to that degree. It would have just kind of linearly trickled up as the business improved and as it was known that it had a vertically integrated store, vertically integrated grocery store, vertically integrated department store. We've talked about how Walmart vertically integrated a bunch of technology to create a differentiated product with differentiated unit economics that created better consumer surplus than what was available in the form of Sears and mom and pop grocery stores in the 60s and 70s and 80s and 90s, which is the same thing that HIMSS is doing with the general physician market. But with the efficient market hypothesis in mind, it's like, what is the net present value of this business at any given time? And I would contend that in 2022, I'm now contradicting myself for those really paying attention to the whole podcast. But in 2022, the stock declined a lot, but it could have been argued that the net present value of the business was always $30 a share, and it could have been a fair value of $30 in 2022. And so if anybody argues with me, not even I would know, the truth behind that. It's inarguable because nobody knows that perfect truth other than, an intelligence operating the universe. And the second idea on the subject of an intelligence operating the universe, the second idea is that the phrase that I've used is that the matrix is attacking HIMSS, right? And so all technology, all new ideas, go follow pessimist archives on X. And you'll see that every new technology, every new idea gets beaten to hell until it's proven that it is durable and it's deserving of being woven into the fabric of society that then keeps society warm. I'm trying to be a little bit funny through this process. Anyway, there's my thoughts.
Yeah, we're starting the year with a few chuckles. That's certainly nice. Dr. H, anything related to what Lewis just shared?
Very thought provoking. I love it.
Thank you, Dr. H.
All right, I want to boil down a couple things. This could be rapid fire or not. Feel free to go for as long as you'd like. What do each of you see as him's biggest win in 2024?
I got one that's maybe not the most classic example, but we talked about Andrew's foray into the politics arena briefly. I think he kind of maybe learned his lesson a little bit because he went a little quiet with anything politics related for a few months. But then after the election and with the new incoming president and their new cabinet level positions being kind of fleshed out, and we see, the potential roles of business people like Elon Musk and Ramaswamy, I thought it was kind of cool and a big win how Andrew all of a sudden said, hey, you know what? I'm going to take my gloves off. I'm going to try to directly engage with someone like Elon Musk and try to get my business into their minds and on their table and see what we can do. Like, I'm going to go head first into this and try to be an advocate for my company. So I thought that was a win and a cool thing that, he probably got some big blowback from his first foray into politics, but then, picked himself up and thought he wanted to do something really helpful for his company. And I was excited when he started. Well, first I was excited when he briefly followed himself for a few hours before he unfollowed us.
It was interesting. He had 22 total followers one night. His two most recent follower, I'll just share this quick thing with the listeners. Two most recent followers at that time were Him's House and Elon Musk. I wake up the next morning and he has 15 followers. Sadly, Him's House was not among them at that time. So
maybe his fingers actually followed us, but we're definitely on his radar. But that was a big win to get him to acknowledge that we're kind of around and we have such a big community of investors. So hopefully we can do something with Andrew directly in the new year. But I also think it was a win that he kind of learned his lesson and is still not afraid to engage in people, in politics who may have a direct influence on how his business and our investment goes in the new year and the next couple of years. So I thought that was pretty cool.
Yeah, Dr. H, I love that perspective. And to the end of your concluding portion of your remarks, I think that's the biggest thing to take away from all of our comments on the political related stuff. Andrew Dudum is a very young man. Like, he's in his mid 30s running a substantial company. And he has a ton of responsibility, and he's a complex human being with, different incentives pulling him in different directions, family, love, his business, his employees, all of this stuff. And so while I have been a little bit critical, try to give grace. And then the other idea, and I do think that we've seen improvement in kind of the way that he's interacted, and I think it's nothing but positive. The other idea is that the legal battles, your ideas provoked this thought in my mind, that the legal battles are very much akin to what Uber experienced. And so it's like, and we've talked about how Uber and Hims have very similar business models on past podcast episodes. I think they're actually strikingly similar. And it's interesting, as an aside here, that the former DoorDash CEO, which is, competing with Uber, is now on the board of directors. Chris Payne, he's on the board of directors of Hims. But my point about this is that Uber went through a similar experience. It had major legal battles through the first 10 years of its existence. There was just constant controversy. And on the other side of it, it demonstrated that it had created a very valuable, vertically integrated platform that now serves like hundreds of millions of people globally. But it had to do a decade of legal battles everywhere, in every country around the world. And it had to work through that controversy. So, I think what Hims is experiencing is growing pains. And we've also talked about that on past podcasts. You should go listen to all the podcasts, because the curriculum builds.
And there are only 16 before this. I want to hit a couple more things before we close. Number one, Hims has more than 2 million total subscribers, more than 50% of which now use a personalized solution. In 2024, they acquired, I think it was a 503B. The 503A was earlier. Is that right? I think that was
503A was acquired in the form of Apostrophe in 2021, and the acquisition was meant to create compounding and personalized drug capabilities, which have been executed perfectly for the last
beautifully, yeah.
3 years.
So the 503B was in 2024, and I think we'll know a lot more in 2025 as to how they're going to use that. And revenue guidance was raised each quarter. I think for full year 2024, we're at 1.46 billion. We're expecting earnings to be early February, but I think the company should announce that in the next week or so. That is when they'll report, with many expecting the company to blow away the 1.46 billion for 2024. Okay, with that groundwork laid, any of those numbers that are most interesting to you? Is it revenue? Is it number of subscribers using a personalized solution? Is it the acquisitions? What are we to make of these numbers, which continue to soar?
I have a kind of funny one, then I'll just turn it over to Dr. H. The funny one is that it's not funny. It's kind of funny. Within the context of what you'd expect me to say, it is funny. So, but it's also important. Anyway, so they now have 100,000 subs over the age of 65. And the implication of that reality for the business now is
when was this announced, Lewis? Was this part of the Q3 earnings?
Yes, Q3 2024 earnings call.
So 100,000 of the total 2 million subs
are over the age of 65.
Got it.
We can fact check me, but I have the earnings call up. It's a surprising number, right? That's striking. Well, the ED pills.
Right. Would you expect it to be more or I mean, hers
would be a lot less.
Hers itself, I should have added, is now 400,000, so 20% of total subscribers.
Is the hers brand?
Is the hers brand.
That's another huge highlight that we could talk
and we should probably spend a moment on that, but
what I think both statistics, the 400K hers subs and the 100K over 65 subs, I think they both indicate that it's just hard to be bearish on the business through a narrow prism, which is what all the bears do. And that's what I was thinking about also this morning was, I see so much bearishness and it's like, okay, but you're bearish on the business. What part of the business? What specifically, what book of business? There's like 50 SKUs. Which SKU do you think has impaired unit economics? And, the people that are just tuning into the thesis today would say, they're going to talk about GLP-1s or this or that. But this is my number one highlight for 2024. The business has become more robust and diversified as essentially a conglomerate than it's ever been. And so if you want to be bearish on HIMSS, you can take the very narrow route that kind of distills the whole business of look at CAC per net new sub. It's increasing. That implies that perhaps the net present value of each new customer is not positive. The unit economics are impaired. You could say that sales and marketing is increasing as a percentage of revenue. You can be bearish through that distilled lens, but the tangible, concrete reality is that you can't, because those metrics have been stable or improving. And in the case of the latter, sales and marketing as a percentage of revenue, it's the best it's ever been in the company's 7 years. So what's most heartening to me about the business is that it is more diversified than it's ever been. It is more products than it's ever had. And, that it is just the most durable version of itself.
I want to take the final part of the podcast to look ahead to 2025. Now, we do still have the Q4 earnings report ahead of us, and we will be with you in early February to dissect that. But looking ahead to the full year 25, are there dates on the calendar that we're circling? Are there products on the roadmap that we're circling? What are we tracking? What are we most looking at as we gear up for the new year?
Yeah, I think everyone's attention is on GLPs and weight loss, and regardless of whatever happens in the courts. My personal thought is Hims is just going to be on the same level as any other ethical company will be when they have to deal with whatever happens with the decision. So whether if everything's taking off a shortage and no one can do GLP-1s, I don't think Hims is going to be worse off than any other telemedicine company. It just means that they may have more interest in their oral medicines. And I think it may just mean in the next couple of years when compounding can be legally allowed, then they just restart right back up and just pick up where they left off. So I don't think it's going to affect him directly for sure, but it just means, in my opinion, I think they're just going to put a pause on this and, just hit the ground running again when everything is okay to do. I'm looking forward to the new treatment options from a medical standpoint. I mentioned that, Hims leaves little nuggets of where they want to point the direction of the company with, the OB-GYN specialist, and there's a big interest in women's health. I'm looking at when they start doing things like menopause. Hims has mentioned, articles about testosterone, things like that. So I feel like those areas are going to come down the pipeline. And while maybe not as exciting to the public as weight loss, those are still very viable medical areas that people need medical care for. And it's areas where it's underrepresented in the medical community. It's hard for a woman of menopausal age, to get their symptoms taken seriously from their primary care doctor sometimes. The primary care doctor in person might not have enough experience doing menopausal care. So these are areas where, going along with the thesis when Hims first started, you're looking at conditions that are harder to treat or have some kind of stigma with it, but you can really make a great niche out of treating these conditions and really personalizing it and making it easy for people to get this care. So I'm looking forward to the new hormonal things that are coming out, as mentioned on their roadmap in their investor presentation. So aside from the weight loss stuff, I think that's going to be a cool area that they're going to roll out soon.
Dr. H, quickly double clicking into the weight loss. Let's say semaglutide is taken off shortage. Hims will have 60 or 90 days to continue to sell it. Afterwards, what do we expect to happen? Are they going to shift to orals? Are you bullish on liraglutide? Do we expect the company to fight in the courts? Which of those three is most likely?
I think they'll probably do all three options. And if that happens, basically everyone should be playing by the same rules and the court decisions. I mean, you'll probably see some med spas that are trying to skirt around the issue and still offer medicine, under the table or illegally or something like that. So there's always that possibility. But any reputable player in the medical field, they'll have to follow the same rules. So no one's going to have compounded medicines available. Yeah. I think a lot of these people who are on compounded tirzepatide or semaglutide now, a big portion of them probably will just take a break and stop all medicines for a while. They've lived years and years and years struggling with weight, have finally found a weight loss solution. I don't think a big part of these people can afford $500, $600, $1,000 a month for the brand name versions. I think they would, actually, I've seen this happen. They would just take a break for a while. They'll take a break for 6 months, 7 months. Part of that group of people, they may try oral medicines, but their options are just very limited. Even if they have insurance, it's probably a under coverage insurance, so they may not pay for a chunk of that cost of the brand name. So I just think, honestly, they'll just stop for a while with a part of them going to orals and just wait out the decision and see when the medicines come back for availability.
And Lewis, 2025, what are your top predictions for Hims?
So the basis of the thesis is that Hims is an AI orchestrated general physician at national scale. And it is that via a end-to-end as they characterize it, but as I would say, a vertically integrated platform that's, akin to Uber. And I'm just looking forward to further development of that vertically integrated platform, because the vertical integration creates a better consumer experience. I think for those that want to better understand Hims, if you listen to Hims Q3 2024 earnings call and listen to the description that Dr. Carroll shared, I think it was very powerful, and it illustrated the value of having this vertically integrated platform that leverages artificial intelligence to create the most optimal consumer experience. And I think using that platform, to buttress what Dr. H was saying, I think using that platform, Hims can retain a lot of these weight loss users. It can continue to nurture a relationship with those weight loss users. It can nurture relationships with, menopausal women, men that are struggling with testosterone. So what I would like to see for 2025 is the further development of the vertically integrated platform that is Hims, the integration of the 503B pharmacy, the further development of its, the robotics in its warehouse facilities, which create greater efficiency, which ultimately flows through to consumer surplus. And consumer surplus is a reflection of the value that consumers receive from this platform, the benefits that they get. So further vertically integrating, further developing AI, further becoming multi-product, via which they expand the value of each customer, because the customer comes, buys one product. Hopefully they buy 2, 3, 4, 5. They don't all have to be, the most intense meds, but they continue to nurture their product categories and expand the value of each customer. And I think that, it's just, the essence of the thesis. And GLP-1s is a legal battle. There's going to be legal battles. I think that's kind of now what we've learned, is that being a part of this company, being a part of this thesis, we're going to have to just sit through the grind of legal battles. And Uber did it for 10 years. Amazon and Walmart both did it. Visa was like a 30-year legal battle in the 20th century. Every great company, for to a large degree, is just going to have to sit in the trenches for a decade and fight the legal battles, and that's from which we get our big reward. So I think everything's great. I'm looking forward to 2025. I'm looking forward to the platform growing and evolving, and I'm looking forward to the legal battles. I think it's great. Join the Discord. Let's talk about it.
Any quantitative predictions? Revenue, stock price? Where are we going to be Christmas time in 360 days, Lewis?
$50 a share. Let's see.
Yeah.
Let's see.
That's a double from here. So I did a Twitter poll the other day. I mean, gosh, I think most of our followers are like-minded and bulls, but not all of them. I said, where are we going to close, or any price targets for 2025?
Yeah.
And what happened? I think it was 31. Can you pull that up, Lewis? It was maybe 33% put us in between $40 and $50 a share, 31% $50 a share or more. So there does seem, so close to 2/3 of our followers think we'll be at least $40 a share in a year. I think that's reasonable if we hit $2 billion in revenue.
Okay, so I'm on my phone to use my calculator. I'm not on social media in the middle of our podcast. But so, all right, so I'm of a similar mind to everybody, but the quantitative basis for me believing it's going to be $50 a share is just, real straightforward. 15% free cash flow margin, $2 billion in sales, 40 times multiple for a company growing at 20% would be reasonable. This
Sorry, 40 times what? Free cash flow?
Free cash flow.
Yeah.
So the 15% of 2 billion is 300 million times 40 times equals a $12 billion market cap, which is well over double where we're at today. It's not well over, but it's over double from where we are today. And so that's sort of the basis of me saying $50 a share. And I don't think that's outrageous at all. I think that's like totally well within the parameters of what could happen. That being said, I think it should probably trade at 50 to 60 times free cash flow. And the bears that want to debate me, let's debate. Let's talk about that. Let's go through the 4 points of equity value. What's the durability of the cash flows? What's the prospective growth rate? What's our next best alternative? What are the margins going to be? It's super simple, but we can debate that. I didn't mean to be combative.
You aren't combative, Lewis.
Okay, thank you.
Dr. H, are you on board with $50?
I'd like that. I think that'd be a fair estimate, but you can never really predict the future in the stock market. So who knows what will happen? But based on all the quantitative metrics, I mean, logically, it's possible and very feasible.
Yeah, I don't think we're releasing any official Hims House price targets, but it does sound like we're all in the camp that $50 a share by the end of 2025, assuming revenue climbs 35 to 40% year over year, and free cash flow margins are roughly stable. That $50 a share would be a reasonable valuation at the end of it.
And I think to that end, I as a bull on something, it's hard emotionally, like subconsciously, not to be a bit defensive to the bears. I think everybody can kind of acknowledge that that is something that happens, but I don't take any issue with the bears. Like at the end of the day, it's all a part of the scrutinizing process. It's all a part of building a great business. Tesla has been the most hated company possibly ever. Tesla and Chipotle. Chipotle is a funny one. Every time you read Chipotle comments on the internet, it's like, I hate the burritos. And it's like, it's hands down the best.
I had a really bad experience with a burrito bowl recently.
You had a bad experience?
I did, yeah. I'm sort of off Chipotle, which may be blasphemy to you, Lewis. I used to love it.
Okay. Well, Wendy's almost killed my grandma when I was like 9 years old. She had a bad potato and like literally almost died. I mean, things happen. Things happen anyway. Me defending Chipotle, but seriously, Chipotle has been very hated through the process of innovating this new food format and scaling it to a huge level. So I'm super optimistic for 2025. I think risk return is very attractive. I think everything's going well.
Should be a fun year. On that note, this has been Hims House episode 17. We will be with you every step of the way throughout 2025. Thank you so much for listening. If you haven't hit like and subscribe, apparently that helps the algorithm. We will see you in the Discord after this. Thanks so much, and we'll see you next time.